What's up, YouTube? I'm Adam Odell, Chief Investment Strategist of moneyandmarkets.com. I'm joined by my research analyst, Matt Clark, and we're here for another week of Ask Adam Anything. So I think we've got some good questions on one of my favorite services that we run here, Green Zone Fortunes. So it seems to be most of the questions relate to that. So Matt, with that, let's get started.
Very good. I will tell you that we will have, if you look up top on YouTube here, we will try to insert a link on how you can learn more about Green Zone Fortunes and get involved in Adam's service. It's a great service, and definitely want to make sure that you have access to that. Now, I'm going to start questions. I've got about 4 of them today. We're going to kind of roll through those and really punch them out here. But the first one involves kind of a stock analysis for you, Adam. A person wrote in asking about Movado, which is MOV on the ticker, and they're asking your opinion of the stock, regardless of tax consequences, whether it's one to keep in hopes that its NAV share continues to increase in price, or should they sell and retain balance of shares, or take a very safe approach, sell all the shares and put the proceeds into an emergency fund. So kind of an interesting way to look at it. But let's break down Movado a little bit.
Yeah, so I'm actually going to go, I've got several answers to this question because it's kind of multifaceted, but I'm going to start by hitting the moneyandmarkets.com website. At the top right corner, we've got a green zone rating box there that you can type in the symbol of any publicly traded stock. So I'm going to pull up Movado Group. I haven't actually looked at this stock too recently. I love the watches. I actually own a Movado. I got it for an anniversary present. They're nice looking watches, I think. So yeah, this actually earns a very strong rating. This earns a 95 overall on my 6-factor rating. It earns a 92 on momentum, 80 on size, 63 on volatility, 79 on value, 85 on quality, and its lowest score, 52 on growth. So overall, that is a really well-balanced stock. If you look at the 6 core drivers of stock returns, market beating returns, it earns a 95 overall, and that's a solid stock. So this gentleman's asking, should he sell the stock now? Based on the rating system, I would say no. I'd say it's a hold. I mean, a 95 out of 100, it's likely to either 2 times or 3 times the overall market. So I would hold it based on that. Now, the other parts of this gentleman's question, he's asking if he should sell some of his shares or even all of his shares to fund an emergency fund. Now, that kind of puts off not a warning bell, but it's something in my mind. And this is not personalized individual investing advice, but in general, if somebody is asking me, should they put some money into an emergency fund? The answer is heck yes. So if anybody is asking that question, you can sell a portion of these shares to fund your emergency fund and then hold on to the rest of them. Now, this gentleman revealed that he actually got 2,232 shares gifted to him back in the 90s as a sales incentive or as a bonus for working for the company. So I thought that was interesting. So by my calculations, he has maybe $70-some thousand of equity in the position. You could take 10% of that, 20% of that, and have an okay emergency fund. So that would be my general recommendation, would be to make sure you do have an emergency fund. And if you are thinking about selling a stock because it's up nicely, sell a portion of it and hold on to the rest. Certainly Movado is rated strongly. So it was, I think it'd be a hold for us otherwise.
And just as a real brief reminder, if you are interested in learning more about how the Green Zone rating system works on Money and Markets, we actually do have a video a little lower down on our YouTube channel that explains exactly how you can use it, how it works, and what you see whenever you do this. So I encourage you to check that out if you're interested. Now, another question. This is from a 72-year young man. He says he works full-time, interested in income and income with growth in a portfolio. And he asks, which one of your subscription services do you recommend for my consideration?
Okay, so that's a great question. For somebody in their 70s that's looking for kind of a steady Eddie stock trading program, I would recommend Green Zone Fortunes. I alluded to that with the Green Zone rating system, but it's not an options trading service. We buy stocks, we buy high conviction companies where we have high conviction in those companies over 6 to 36 months. So it's not day trading. It's not too short term, 6 to 36 months. This gentleman mentions income and growth. We look at a total return perspective. So we're not just buying dividend companies for the income. We're not just buying momentum stocks for the capital appreciation. We're looking for kind of the best of both worlds. Our portfolio companies, some of them offer dividends, some of them don't. Some of them offer higher capital appreciation potential. Some of them are more steady eddies. So it's a good broad mix, but we would certainly recommend checking that out. Green Zone Fortunes. That's the Green Zone stock rating model is what was born out of that, or what drives that strategy. So I would definitely check out Green Zone Fortunes.
And again, we'll try to have a link up here to where you can find out more information about how you can get involved in Green Zone Fortunes. Great, again, a great service. I'm always skeptical. I like to do my homework, with Adam, and I'm telling you, it's quite the deal. So make sure you click on the link when we put it up there. Now, another question here is, as a rule of thumb, this also came from an email. As a rule of thumb, I try to limit any investment to an individual stock to no more than 5% of my portfolio. Now, as you build your Green Zone portfolio, do you, Adam, invest the same amount of money into each large cap, mid cap, and small cap stocks, or do you scale down the investment the smaller the stock? As an example, would you be looking at like 10,000 in large cap, 5,000 in mid cap, 2,000 in small cap, something like that? So he asked, kind of, what's your strategy look like when you're trying to invest over size of company?
This is a great question. Believe it or not, money management or position sizing, which is basically saying how much you put in investment A versus how much you put in investment B, if they're both in your portfolio, is a huge driver of overall returns, more so than picking the best stock or the worst stock. And people overlook that. Now, there's a lot of research that says equal weighting position sizing, or 1/n, where you basically take the number of positions in your portfolio and you equally weight all of them, 1 divided by the number of positions in your portfolio. That generally over most market cycles beats any other more complex or position sizing scheme, whether it's volatility adjusted or whether it's conviction based or anything like that. So I would recommend equal weighting the portfolio, the Green Zone Fortunes. Every time we make an investment recommendation in Green Zone Fortunes, we have high conviction in it, whether it's small cap or large cap, whether it's driven more by momentum and growth, or whether it's more of a value and low volatility play. We have pretty much similar conviction across the board because we're very selective. So my short answer to that would be, I would recommend equal weighting them. Obviously, you have to make that call yourself, but that's the best starting point.
Very good. And the last question I have for you this week is, do you ever review a stock's 50-day versus 200-day moving average as an indication whether to buy or sell it, in addition to the 6-factor rating with Green Zone?
Okay, so not in addition to, it's incorporated in. What this question gets at is a trend following rule, or a trend filter. And a trend filter basically says that I will only consider buying investments if the trend is generally up. Now, how you define generally up, there's a number of different ways to do it. You can look at the 50-day moving average. You can look at the 200-day moving average. You can look at 6-month trailing returns or 12-month trailing returns. There are an infinite number of ways to do it, but whatever your simple rule is, that's what you should follow. There are huge advantages to following a trend rule. First of all, it increases your probability of making successful trades, and it decreases the risk of drawdown on the trades that don't go your way. So generally, buying things that are moving higher is a great way to do it. That's a key element of almost all of my trading strategies, and certainly in Green Zone Fortunes. Now, in Green Zone Fortunes, we look at the 6-factor Green Zone rating model. The momentum factor is one of those 6 factors. And that factor, the momentum factor, does incorporate trend rules in its momentum rating. So if you have a stock that's in a downtrend, it's not likely to rate high on the momentum factor, and that's going to bring them down the overall score. Otherwise, if it is in an uptrending, if it's in an uptrend, the stock, then it's going to rate higher on momentum, and that'll bring the overall score higher. So we incorporate it into the overall score because it is very important, and that we think that's the right way to do it.
That's all the questions I have for you. If you do have a question for Adam, make sure you send them to us, feedback@moneyandmarkets.com. We'll put that email address right down there. Don't forget, if you're on YouTube, make sure you subscribe to our YouTube channel and get alerted to each and every time we put out a new video. We've got the Marijuana Market Update. We have the Bull and the Bear podcast, Ask Adam Anything, Investing with Charles, and more on the horizon. So make sure you do check that out. But Adam, that's all I have for you this week.
Great. Thanks a lot, man. I'll see you next week. Well, I'll talk to you before then, but
Indeed.
Thanks a lot.
Thank you.